The surprising truth about median household income. If you're looking to see how you stack up against the rest of America, there's one big number that you should keep your eye on: median household income. This figure, calculated and published by the U.S. Census Bureau, measures the wealth of the median family, or the middle-class family if you will. In 2016, it was $59,039 per year for families and $28,155 for individuals who were between the ages of 18 and 34 years old. What is median household income? Median means the halfway point between richest and poorest. So if you lined up everyone in your area from poorest to richest, the person in the middle would be the median. For example, if there were 2 people living on $4 per day, 4 people living on $10 per day, and 3 people living on $8 per day, then the median would be someone who lives on $8 per day. Median household income is also a good way to measure how well off a country is, as it can indicate both how wealthy households are and what proportion of households have low incomes. The poverty line for people living in Western Europe, Oceania and America is around 10%. That's right, 10%. Meanwhile, developing countries such as India or Kenya see much higher rates of poverty at 50% or more. What does this mean? It's not enough just to look at the percentage of those living below the poverty line when determining relative poverty levels. We need to look at those that fall into that middle category too. The Organization for Economic Cooperation and Development, OECD, recently found that Denmark has more poor than other countries with 12% below the poverty line, but another 19% that live comfortably above it, meaning a total of 31% either do not make enough money or do not earn enough from their labor alone. We all know that there are a wide range of incomes in America, but what is the median household income? The average person has no idea, and it turns out that it's not just high-income earners who have a skewed perception. The average American believes the middle class to be earning $50,000 per year when, in reality, the average is closer to $44,000. There's a lot more disparity between the top and bottom earners than you may think. Those on the higher end might make up as much as 50% of U.S. households, while those on the lower end might only make up 20%. It should come as no surprise then that most Americans overestimate their own salaries by at least 25%. When asked what they would do if they won $1 million in cash right now, 3/4 of people polled said they would continue working because they feel like their salary is too low. Median household income is still a useful metric for measuring the health of the economy, and it could be seen as an indicator for how the middle class is doing. It's important to note that it does not take into account factors such as taxes, the cost of living in different locations, and state-by-state differences in social safety nets like subsidized housing and food stamps. These factors have a big impact on what people can actually afford to buy with their salaries. When you control for these variations, you'll find that there are some states where people have higher purchasing power than others. Subscribe to Capital Investments.